Hey everybody, it's CSEC Panda. Today I'm going to talk about the bank reconciliation statement. Now, why is bank reconciliation so confusing? Really, the good news is it doesn't have to be. I used to be very confused about this myself, but eventually I realized that there are actually only three things that you need to do. So to help myself remember, and now I'm passing it on to help you remember, I have it down as these things. You have to update the cash book, add unpresented payments, and less late lodgements. Literally, that's it. The number you come out with at the end of that is the answer that you're looking for in terms of your reconciled bank or cash book balance, right? They will both match after that. Your cash book and your bank statement will match once you do these three steps. So to help you remember them, I've got it like update the cash book is really just the process of giving the cash book the latest gossip from the bank. You know, there's always this one friend who they'd never heard of the news, they don't know who Jay-Z is. That friend, that's your cash book at the end of the month. It just needs to know what went on at the bank because bank-side transactions is just not up to date on them. The second thing is to add unpresented payments, also called unpresented checks. I call it unpresented payments here so you can remember add up, right? So those are the ones that you add up. And I'm going to help you identify unpresented checks in a minute when we get a little bit further, okay? And the last step is to less late lodgements. To help you remember this, I've got if our secretary Stacy took less late lunches, then we would have less late lodgements. Because if you remember, late lodgements are when we are slow in getting money that we received into the bank. All right? So Stacy was taking a late lunch, and by the time she got back, bank was closed, so we have a late lodgement. All right? That's just to help you remember. So really just hold on to these three things, only three steps, right? Update the cash book with the gossip from the bank, add the unpresented payments or checks, and less the late lodgements. All right? All right, now let me talk a little bit more about what this really means. There are a couple of things that you definitely do need to know before you can do this with ease, all right? I'm going to try to run through them as quickly as I can. The first thing is, why is bank rec necessary? This is something that CXC does ask on the exam. Essentially, you need to know that it's detective work, where basically your task is to compare the two records, being the cash book, which is the company's record of the money that it received and paid out, and the bank statement, which is the bank's matching copy of transactions that happened, what went in, what went out. All right? Because the totals on these don't always agree at the end of a month, you need to do bank reconciliation, which is where you compare these two records to make sense of the differences that you see. The reason that this is important is because some differences, like timing differences, right? Money being literally deposited late into the bank due to our error, etc., or unpresented checks, that is to say, people who we paid with checks not being too much in a hurry to take their check to the bank and get the money out, so that the records might show a different story, even though everything is completely legit and above board. But the biggest concern is that some times when these two records don't match, it could be because of fraudulent activity, right? Like Stacy's helping herself to a little bit of iPhone money on the side, something like that. We want to be able to detect fraud, and we want to be able to detect errors in our records with BankRec. So that's what it's for, okay? Now the second thing is the POV issue. Is it a debit or is it a credit? What does a debit mean? What does a credit mean? It can be confusing, right? The very first thing that you just want to remember about this is that it's pretty simple. It's like how if you're facing someone, your left-hand side is their right-hand side, right? And if you ever really fully noticed that, but this is how the question, my left or your left, comes up, because your left-hand side is their right-hand side because you're facing each other. It's a kind of point of view thing. Exactly like that, there's a point of view difference with a cash book that's kept by the company and the bank statement that is supplied by the bank. Literally, the left-hand side of the cash book is the debit column, and that is for when money comes in, right? The right-hand side of the company's cash book is the credit side, and that's for when money goes out. So from right now, you can start thinking about them as in and out, just to help yourself. Especially on the exam, I would recommend, if you're not too clear on this, that you take the cash book that they give you and you write on the left side, the debit side, you want to put in, and on the credit side, you want to put out, right? You want to do the opposite thing now to the bank statement that they give you. Because on the bank statement, debit means that money went out, and credit means that money came in. And that's just a point of view thing. You don't want to be confused about this, so just write it down. On a bank statement, debit is out and credit is in. All right? So when you are comparing the cash book and the bank statement, as you do the first step of bank rec, you kind of going to be making an X, right? So it'll be like an X shape type of thing as you compare the left side of the cash book to the right column in the bank statement and the right side of the cash book to the left column on the bank statement. That can sound complicated, but it's not too bad once you understand what I mean. It's actually a simple idea. Alright, and then the third thing is that sometimes before they ask you to reconcile the bank statement, they ask you to balance the cash book. If you don't know how to do this, it's actually a very simple process. It goes for a couple of marks. Let me just show you. Here you see we've got this cash book, so it's got the debit side and it's got the credit side, and you see this is in, so all the money that came in over here, starting with the balance, and then these 60, 40, 130, these are payments that came in, right? And on the other side, which is the credit side, we have, 150, 40, and so on. This is money that went out. So in order for you to balance this book, you want to add up everything on the inside, and then when you get that total, you want to subtract everything on the outside. Now you notice on this slide here, I have BAL CD, balance carried down, at the end of the month, and you're going to write the number that you get after you add up the debit side and subtract the credit side. You're going to write it under there. Now take note that this is just because in a cash book, which is, again, keeping note of how much money the company has, they are more likely to have more money than they spend, right? But it's also possible that they may have overspent their money, and this might be a bank overdraft. So one of the things that you want to look out for is if you have got a minus number, after you do that, add this side minus that side, you come up with negative something, then that indicates that that is an overdraft, and you'd need to write it on the debit side of the book, like this, as the balance carried down, and then you'd be coming over to the opposite side to have the balance brought down. So just put BAL B/D as the balance brought down into the next month. And that is the cash book balance. It's how much money that the company believes that they have in the bank, right? So this makes perfect sense because what they've done is they've added up all of the money that they had in, including their balance from the previous month, and they subtracted all of the money that went out, and this is what they have left, right? So that's how you balance this cash book. You bring it down on the other side, and you say that for the beginning of the next month, you've got this as the balance brought down. Now that you have your cash book balance, you need to update it by comparing it to the bank statement. This is what I was saying before about the cash book being like your friend that hasn't got all the gossip. There are some transactions that happen only on the bank side, so they are only known to the business when they receive their bank statement. So this will be things like interest, bank fees, not sufficient funds checks, etc. The good news for you is that you don't really need to know too much about all of these things. You just need to know whether it's an in or an out. And that's why I recommend really drilling it into your brain that for the cash book, debit is in, credit is out, and for the bank statement, debit is out and credit is in, right? That's going to help you more than anything else. So the first step of bank rec, which we finally arrived at, is to compare the cash book and the bank statement. When you're doing this comparison, you're going to come away with three kinds of numbers from this. The first kind is going to be the unknown transactions from the bank that need to be added to the cash book. So you want to make a note of these just the side of your paper when you're doing it, unless they have a format for you to do it right there. But these are the things that you want to make a note of, right? So you want to write down, and I would suggest that you just literally put in and out, unless you feel so comfortable with the debit and credit that you can do that, but in and out. And then you're going to look from the cash book to the bank statement, cash book to the bank statement, and you're going to compare and see which transactions are appearing on both. And if you see a transaction, and you're going to put like a little check mark by the ones that appear on both, right? I'm going to show you how to do this in a minute. But whenever you see something on the bank statement that's not in the cash book, you need to update that figure into the cash book, right? So you just want to know, is this an in on the bank statement that we didn't know about before? And you're just going to write it down as an in, and then when you go back to your cash book, you're going to add it to the stuff in the cash book as another in that we needed to know about. In this case, a debit. You put it on the debit side. And then you're going to see if there's anything else in the bank statement that was not apparent on the cash book, like an out. You would want to put that in as another out, right? Once you've completed that, you would have your updated cash book balance. Now, the next set of numbers, the unpresented payments and the late lodgements, are going to be items that appear in the cash book but not on the bank statement, right? So again, you want to have two little areas where you're going to write these. The unpresented payments are really going to be the things that appear on the credit side of the cash book but not on the bank statement. And the late lodgements are going to be the things that appear on the debit side of the cash book but not on the bank statement. All right? And you remember, we're going to add up and try to take less late lunches, less late lodgements, right? All right. So let's look at a little bit more of an example of exactly how that's done. Here you see we have this cash book and bank statement. Some transactions appear on both, some do not appear on both. So we're going to find out which ones those are. All right, so we see the balance. We start off. That looks good. Balance of 500. That's good. So then we see 60. It also doesn't matter necessarily that it's the exact transaction, although CXC doesn't make this too difficult. But as long as you see a 60 in this as an in and you see 60 in over here, then you're good to go. It doesn't have to be exactly the same transaction, but you could look at the name too just to help you get that better. Alright, so 60 on the debit side of the cash book, meaning in, and then we come down to the credit column and we see, yep, there's 60 in. Alright, we're going to look over here, we're going to see this 40 that was in the cash book, and we look and we see that that is not there in the bank statement. So this 40 is going to be written over here as something that appears on the cash book but not in the bank statement. And because it's a debit, bank statement. So we're going to write that over there by the 40. We're going to come back to that in a little while. That's one of them. Alright, we see 30 on the cash book. We see 30 on the bank statements. But then you would have noticed that there's this interest of $20 here. That's an in the bank, but we didn't know about that in the cash book because that is a bank side only transaction, right? So we're going to make a note of that. We're going to say that this 20 is going to be in this little area up here, and we're going to record that as an in that we need to update our cash book with, right? So that's going in the little in section, 20. Alright, then we do the other side of the book. Alright, so doing the outside of the cash book now, we're going to go ahead and compare. So we've got 100 up here, and we got 100 down here. So we check that off, that's good to go. We have got our 50 up here, but we don't see 50 down there. So we're going to write this as an unpresented payment. Okay, that's going to go down there in that little area there, and that's going to be one of the things that we add up. We add the unpresented payments. Alright, we continue comparing now. We see 40 in our cash book and 40 in the bank statement, so that's good to go. We make a little check mark there. 60, and we don't see 60, so we write that down. Another unpresented payment that we're going to need to add up. Alright, we continue. We see 70, we see 70, and that brings us to the end of our cash book. But look, now there's $100, that's a standing order, and that's $100 out. So we're going to write that down as an out that needs to be included when we update the cash book. That's $100 to out, right? Okay, so what's happened here now is that we have got all of our transactions that were in question. Every one of these numbers that we've written down here is something that we are now going to process so that we can get our reconciled bank statement. Alright, so we're going to start by updating the cash book, right? These are the 3 steps. We're going to do them now. Our cash book needs to have our cash book balance, which was 410 before. We need to write 410, and then we need to add $20, which was our in, and then we need to minus $100, which was our out, right? And so when we do that, we get 410 and 20 is 430, minus 100 is 330, okay? So this 330 now represents our updated cash book balance, right? Because we added the things in and out, well, added and subtracted the things in and out that we needed to know about. We take our updated cash book balance, which is 330 in this case, and we go ahead and we add up. So we add our unpresented payments, right? So we've got them up here listed, and we're just going to go ahead and say plus 50 plus 60, all right? And 50 plus 60 is 110. So when we add that to 330, what we're going to get is 440, right? Then we are going to less the late lodgements. So that's going to be 440 minus 100 minus 40, and that's going to bring us to 300. And as you'll see now, 300 is the balance as per bank statement. So we have just successfully reconciled the different number on our bank statement with the number in our cash book. What we noticed from this is that all of the transactions that were different for legitimate reasons. It was only made up of legitimate unpresented payments or unpresented checks and late lodgements, along with legitimate bank transactions like a standing order and interest that we are okay with. So the good news here is that there has not been any error in our records and there has not been any fraud. And basically, that's what you want to do. So again, you just need to remember that you only need to do these 3 steps, which are updating the cash book balance by adding the ins and outs that were unknown, by adding up the unpresented payments, and by doing less late lodgements, right? And that's pretty much BankRec. So I hope that this has helped you to understand what you're looking for. I hope that it cleared up all of the questions that you had about this. Like it if you like it. If you have any questions, would you leave them in the comments section? Please consider subscribing, and I will see you next time. I wish you all the best on your exam.